Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at a moving average crossover. This type of a trade setup is formed when we look at price action, but we also take into account our indicator called moving averages. So this is good for anybody who has trouble really seeing the price action and wants just extra confirmation to take the trade. So let's go on to the charts. We'll take a look at what kind of moving averages to use, what exactly we're looking for on our chart, where to enter the trade, where to place our stop loss, and as always, how to exit the trade with a profit. Let's take a look at how to trade using moving averages. This is Euro Aussie 1 hour chart. Moving averages are a good indicator to use if you're looking to understand where the trend is and you're looking to go with the trend. So this is a great trend trading strategy here. Now, do keep in mind moving averages, just like other indicators, are a lagging indicator and price can turn around before the moving averages do. So just always keep that in mind. These are lagging indicators and we have to keep that in view as we are taking our trade. So I like to use combination of price action and moving averages. So in this case, we have price going into this resistance level here. Our moving averages have crossed here. So I'm using 50 and 100 moving averages. So when the 50 crosses the 100 to the downside, that means the price is likely to drop from here. And here we see that moving averages have crossed, but the price is still going sideways. And then price goes into this support resistance area. We get a bearish engulfing candle, and now price starts to drop from there. And once we get a close below this moving average here, both the moving average lines, this is a good place to enter. But if you want more of a confirmation, this candle here, the large bearish candle, is a good place to look for an entry because now momentum has shifted to the downside. So we take our entry at the close of this candle here. Our stop would go on the other side of the stop resistance area. It could even go higher above this level here, because just in case price goes and tests this level once again, our stop will be in a safer place, but this is a more for a smaller stop here. So we enter the trade short, and then we see that as price is moving averages spread out. That means the momentum is to the downside, and now we have the price has picked up speed. So we stay with our trade as long as price is dropping. Our moving averages are spreading out, and then as the price starts to go sideways here, it starts to pull back here. We see that price closes above our 50 moving average. This is a good point to exit the trade, or if you wanted to really wait for the moving average crossover, you can do so as well. So in this case, price goes all the way into this 100 moving average, but then bounces off of that, and finally we see that here moving averages cross. It's either exit is fine. So you can either exit the trade once the price closes above this faster moving average, or you can wait for the moving averages to cross over in the opposite direction. Here we see the moving averages have crossed over, and now the price has started going higher. So either of those exit strategies are fine. It is really up to you as to what your preference is. Some people would have a hard time just staying in the trade for this long when price is chopping around, or if you can sit with it, then you can just look for the crossover and exit the trade. So just to recap here, moving averages are a good way to look for the trend and stay with the trend. In this case, we see that moving averages have crossed to the downside here. We can wait for price to give us a good solid entry here. However, you could enter the trade here, any of these levels as well, which will also be a valid entry. But in this case, we see that momentum has now shifted. Price was just going sideways here, but now we see that momentum has shifted. It has rejected the support resistance level, and we can take our entry short here. Stop would go above our resistance level, and we stay with the trade as long as price is moving lower. We see that our moving averages are spread out, which shows that momentum is to the downside. And once we see that price crosses our moving average, it starts to pull back, it crosses our moving average to the upside here. This is a good place for us to exit the trade. From entry to exit here, we get 110 pips in our trade. So our profit is 110 pips or $1,100, so $1,100 if trading one standard lot.